You first of all go to a chart. You go to a chart. Let me share the screen again. Assume that we are seeing everything that I am doing. Let me share. Let us, is it NM? Something NMR USDT. Now let us go and check the price again. I don't know if maybe when I want to be sharing screen, I'll be doing this all the time. Are you guys seeing the signals too? It means when I want to share my screen, I'll go to Telegram, and then after again. Good. I'm sure it's visible now, both the signals and the chart.
No, they are not visible. You can see just the chart.
You can see just the chart.
Yeah. Okay. Now it's visible.
It's visible now, right?
Yeah.
Yeah, it is. Maybe you need to zoom it a bit.
Please, let's just take our time. Yeah, we are not in a hurry now. I told you guys that I'm available 247. I want to see people doing analysis. Doing analysis, and they are sending it in the group. That's just my main concern. The truth is that when we gather together and start doing analysis, we will not lack at least even a 200 or even 300% daily. The issue is that we are too relaxed. Yes, we are too relaxed, and we depend so much on signals. It's good to depend on signals, but you actually need to know what to do with signals when they are sent. All right, this is NMR. Our entry point is 17. I think 17.05. 17.05. Good. It means this is where you're supposed to enter. And they are telling you to short. Let me make it big. Let me go to 17.05. 17.05. Please just excuse me. Let me go there. If I'm there, you let me know. Good. Are you seeing it? Are you seeing the 17.05? Follow this black line. Are you seeing it?
Yes. Yeah.
Good. Now look at this chart. What is happening at this part at 17.05? You come. Let us let me draw a horizontal line at that particular level. You see something? Let me see. 17.05. Let me put a line. Are you seeing? What do you see here at this particular area to know if this signal is, what do you see here? Who can tell me what you see? Let me even go to a higher time frame. Let me go to 4 hours. No, 4 hours isn't that clear. Let me go back to 2 hours. Let me go to 2 hours. What are we seeing here? Are we not seeing a double top?
Double top.
Good. It is very, very clear. Those are some of the things that you are not trading. It's even a triple. Look at, it's even a triple top, because when you look, this is the first, this is the second, and this is the third. And then here you have what they call a neckline. If I can type. You see what they call a neckline. So, in other words, they took this trade here because are you seeing the neckline? This is our neckline. And that is why you saw that this, it did very, very well. Look at, because the analysis there was perfect. Now they took a shot. Let us go back to the signal. Are we seeing the signal? Are we seeing it here?
Yes.
Yes, sir.
Good. So this NMRU USDT was a valid signal, because you that's why I might not be doing all the work for you, please. And there are signals that you must not even trade. Yes, the fact that you are in FET Academy does not mean that all signals that you see, boom, you just jump into it because I'm the one guiding you. No, even me here, it's not like I'm too perfect to an extent that anything that I just give you. That is why I encourage people to do what on their own. Because when you learn on your own, you don't have any problem. You just need guidance. It's not like I should be doing it for you all the time. Do it for you. Do it for you today. Do it for you tomorrow. So you saw that at this particular area, we had a neckline. Let us now go to 15 minutes. People, those are always complaining of entries. This is a higher time frame. This they call a mid-range time frame. Because when we talk about lower time frames, is this 1 minute? Look at these seconds. Seconds and minutes. These are the lower time frames. I'm sure I'm going to still talk again on time frames. I'll start doing our videos again tomorrow, so that all these things we should be used to eat. We have lower time frames. Those are the seconds and the minutes. Then the mid-range time frame, the hourly time frame. Then from daily now, they are the higher time frames. So now we go to 15 minutes to take our entry. We have already analyzed it. We have discovered maybe a double top or even a triple top. And we have a neckline. You simply draw your neckline and wait for it to break that neckline. And even if you are trading, even if this was not a signal, when you enter the market like this, you see something like this, you notice something like this, and a neckline, this neckline is always very important. When you identify a neckline, you wait for it to break. Once as the neckline is broken, because in such a situation, notice that maybe you have had a double top or a double bottom, you are supposed to wait for that trade to break the neckline. Where is it again now? Because that this thing has the issue is that it has really passed that particular area where we are. This is 1 minute, no doubt. You guys are not even checking. You are just looking at me. We're even supposed to tell me that no. All right, now look at this is 50 minutes. I wanted to go to 50 minutes and the thing went right up to 1 minute. That's why I could not see the line again. Now, when you go to a lower time frame, you see now a clear picture of what is happening. You have a neckline here. This is your neckline. It remains at that particular area. So now, look at the trade came at this particular level. Look at, we saw a confirmation here, momentum candles. When I talk about momentum candles, what do I mean? You see a red candlestick forming, 1, another one forming 2, and another one 3. So you will see that each time a trade is even breaking a particular area, a particular point of interest, because this is now our point of interest. This neckline is our point of interest. We don't care about what is happening here, and we don't care about what is happening down. This is our point of interest. This neckline, what is going to happen to the neckline? So now you as a trader simply come you simply come now to a lower time frame, this 50 minutes. You notice that there has been a break of this neckline. This neckline here was broken. This neckline, it has been broken. And when they say it has been broken, we mean, when they say it has been broken, it means it has crossed this line that you have drawn, this neckline. But you see that once it was broken, it went back up to deceive you. Look at this long candle here form to deceive you that, hey, this market is like that. It wants to go up. So even if you entered here, even if you entered here, when this green candle was forming, you will be on the loss first because you saw that the neckline was broken and you entered. So you have to wait.
Get people to unmute. Get people to
please,
unmute.
you unmute yourself. This thing is important, please. It's very, very important. So you were supposed, even if you entered here, when this green candle was forming, you were supposed to be making a loss, but that does not mean that you should be kicked out of the market. Where are you going to set your stop loss? You can set your stop loss around this area here. Around this area, that's 21.45. You can set it up here. Why are you setting this stop loss up here? Because look at, this was our, is it a higher low? The last higher low occurred here at this particular level. So you could even if you don't want to, if your stop loss is too big, like for example, you now using 20 leverage, just imagine you, or maybe the stop loss based on the analysis has been positioned at this particular area. You using 20 leverage. If this trade wants to go against you, just this green candle here will kick you out of the market. It is going to liquidate your account because this 50 minutes. Remember that inside this 50 minutes, you have 1 minute, you have 2 minutes, right? Up to, not seconds or minutes. So one of these candlesticks here is taking 50 minutes to form. And look at it, is a long green candle. And that is when you start knowing that leverage is your worst enemy. In short, you should be scared of it. But now, these are some of the trades that with me, I jump in with high leverages. Don't ask me why again, because I've already explained. It is very clear based on the analysis that we did that we have seen a double top. And so when my trade breaks this neckline here, I'm going me down. I'm going me down. Now, once as you draw this neckline, we should be very, very attentive. Once as you draw this neckline, even if you do not enter, even if you do not enter and the market is falling and falling, no, don't just go and take sell. Because once as the market is falling, it must normally go back up. When the market falls, it goes back up. The market does not just fall on a straight line or goes up on a straight line. No, it goes in a zigzag manner. Goes in a zigzag manner. So even if you did not enter here when you saw this momentum candle, you wait for it to reverse a little. Good. So you will not allow this green candle here to play. Let it form and form and form and form. You are not there. And then this is where you are supposed to enter here at the closure of this red candle, because this red also tell you that the market is soon going down. So even if you entered here, look at what happened to the next candle that occurred here was a green candle, and this green candle here, you will start making a loss, but remember your stop loss is somewhere here. Remember your stop loss is somewhere here. So you with high leverage, just before the trade wants to reach at this level, let me show you. Just before the trade wants to reach at this yellow line here, you're already out of the market. But you were so fortunate enough that your stop loss was at the yellow line, that's 17.99. But this green candle had to form, trying to fight this your stop loss here, but it did not touch. That is why most often not that the signals are wrong. It is either your capital disappointed you, or you did not check the analysis to see what was going into the market and you jump in. There are times that me, when I will just go into the market like that, just see, hey, maybe I might be in a haste trying to like identify what is going on in the market. I just tell you to go and trade. Don't just go to because Fedi is the one selling it and you are just trading and trading and trading. No. That is why when I'm even selling setups, I make sure that I write most of the things on it so that you don't ask me again. Don't ask me that, say, why are you telling us to buy? I will just simply tell you, write it there on the screenshot, you see it. Or even draw a line that it is due to this line that I'm taking this trade. And that's what I want all of us here to be doing. So even if you entered at this particular level, your stop loss is there to guide you. No shaking. The trade will play and look at what happened next. It went down. Look at it went down. This is a huge profit that you would have been making in the market. Look at. So if you entered at this particular point here, if you entered this, immediately the neckline was broken. This is your profit. And you see that even if the market is struggling to go back up, it will not even touch where you entered because you entered at this green line here. Look at how the market is playing and playing and playing and playing and playing and playing. So that is why there are times that some signals can take about 3 days. And you start seeing them making 400% profit. They are making 300% profit, 200% profit. Then you, now that you entered, you maybe with your high leverage, just this small pump that occurred here, it's not even a pump. This small movement that occurred here, were kicked out of the market because of high leverages. One person gave a testimony, I'm sure one of my workers, he gave a testimony how he has been using just 5 leverage and he had an account of $300. There are some of us, when they give us that $300, we'll be pumping 20 leverage. And we'll think that maybe we are making money. No. Don't follow me when you don't know what I know. It is very risky for you to follow somebody that you don't know maybe where that person is going to, and you two are just there following. You have to understand. There are some people that when I send signal, there are signals that I send, they don't trade it because they too, they go and they do the analysis. And they hardly complain. So this is just what happened to that signal. And I'm sure this signal was really good. So signals like this, you'll be trading it and you are scared because you already know what is going on in the market. Now, those of you that maybe you started analyzing from 4 hours. Yes, when you start analyzing from 4 hours, make sure you take your entry around 5 minutes. Yes, you can take your entries at 5 minutes. You can still take your entry even at the 15 minutes. It all depends. Now let us go to 5 minutes and see if maybe we'll still have that line. We don't even have the line again because that 5 minutes is too small. Okay, this is the line. This is the line right up. Look at 5 minutes. Let me look at what 5 minutes is telling us. Still at that same line. Good. This is 5 minutes. Let me go to that area where we had a breakout. Here, this area here. Let's go. Look at this candle here. This candle here, this 5 minutes, look at this long candle. That's a long momentum candle. Look at this long momentum candle was a confirmation that you should go on a short. So even if you did not see it in the 50 minutes, as you move down to the 5 minutes, momentum candles, but make sure that the longer part should be that which is down. Look at this line. When we see this line here, look at this candle. You see that majority of the body part is down because this line will cross across. If this line here, if this candle, if the downer part is not bigger than what you see up, you should doubt. Yes, you should doubt, and then you wait now for the next candle to form. So even if you did not enter at this particular level, you wait now for this second candle to form, and you saw that this second candle here was a green candle. Wait for it to close. It was a green candle. That was maybe to clear your doubt that since this one here, this red candle here, you're not too sure if you are to enter. This green candle now will come, go up, and then you see the next one again was still going up. And then immediately after that, you saw the real momentum candles again. These are the three forming. This was another confirmation that you should go on a short. And then look at where your stop loss is. Look at your stop loss. Maybe you can set your stop loss around this area here. There are some people that will even take their stop loss here. Yes, people with low leverage. If you are using now low leverage, you can carry your stop loss even right here. But you with high leverage, this is where your stop loss can be. Look at you with high leverage. Look at another person trading with 50x. This is your stop loss. So this is your stop loss. Because if you try and carry it right up here, like the person using maybe just 5x, just know that that's liquidation. Maybe even before he wants to reach here at this particular point, they already send you liquidation message. So there are some people with 100x leverage. This is your stop loss. You with 100x leverage on this trade. So it is going to hit your stop loss and hit and hit and hit. Yes, because when you enter this trade here with 50 leverage, you put your stop loss at 30%. At 30%, minus 30%. This is your minus 30%. If you put it at 40, you just climb up a bit. If you put it now at let's say 60, you climb a bit. If you put it at 70, it is going to climb again. 80, it climbs, and then 100. Look at it. Means that if you are putting your stop loss here at 18.48, which is this yellow line, 18.48, it is already your account. In short, all what you are trading with, you are using it as your stop loss. That's an indirect liquidation, and you don't know about it. You can still have the capital very well, but if you don't know risk management, you blow off your account. You blow it off. So another person now with maybe 5x, even if you are putting your stop loss right up here, that 5x, before this trade wants to reach up here with that 5x, these people here will sweat. That's they will hunt for your stop loss and hunt for it, but they will never touch it. So you have a high probability of doing what? Of making profit in this market, added to the analysis that you have done. Are we understanding something here? Hello?
Yeah.
Am I talking alone? Are we there?
No.
Yeah.
Yes, sir. We're good, sir.
Yes, sir. Yes, sir. We are there.
Yes, sir, we are there.
So after, look at this display here, look at the market consolidated here. The market consolidated, maybe you go and be checking your trade. The T is only going up and coming down. Some people say they started making profit, and all of a sudden the T just went up and touched my stop loss. look at what was happening here. It is because your leverage first is not permitting you. There are some signals. Now, when you do your analysis, even you yourself, you know the kind of stop loss to use. If you do personal analysis for signals, you are going to know first the stop loss that you are going to use. Yes. Because hello, who is raising up the hand? Please let me finish first. When I'm done explaining, and then I will go for questions. Okay, so the market consolidated at this particular level. So here you will be witnessing some ups and downs. Maybe the market will take you into profit, carry you back into a loss, take you into profit, carry you back into a loss, just like that, consolidated. And all of a sudden, your signal or your analysis must hold. This is it. Your analysis must hold by giving you a shot. This is it. So if this signal was a long signal, you will just tell me that, boss, this is your own analysis that you have done. Me, I'm not seeing me that this signal we are supposed to go long. But since now you don't even understand it, you just go there and boom, you pump it since it's from the boss. You just go and pump now a high leverage, and then the signal in the quarters. You're making noise everywhere that you're a big crypto trader. But anyway, the main aim here is to make you all become better traders. Yes, whether you like it or not, I'm not asking for your opinion. You are going to start trading here and giving me signals. The only thing is that it will take time. Yes, it will take time maybe to absorb all the knowledge, because what I have in my brain to give you guys, there are times I just sit and I laugh because it's really bulky. But I'm not frightening you. It's not like I'm frightening you. But the truth is, they are really bulky in such a way that I am just trying to like compress them so that I give you just the main issues. Yes, I'm sure. Let me say this week we are going to have our YouTube channel. That's the FET Academy YouTube channel, where I am going to be doing some short videos. Even if it's 5 minutes, I'm going to be giving some techniques that you can be using, and you are making even your 20% daily. You don't have any problem. You just sit. You can make it your 30%, 40% on your own. Yes, I'm planning on that. I'm working on that YouTube channel so that I'll do these short videos, and then maybe just send you guys the link. You watch them. Yes, especially how to use indicators. I know that we are lacking in that aspect. How to use indicators and so on and so forth. So is there any question, please? Yes.
Actually, the same signal and the leverage is showing 20. Can you review the
yes
leverage?
Oh, you just like
Follow the
yes, Mr. Fon Emmanuel, I'm getting you.
that's like, I just want to ask if like you are doing it now, then must you use the same leverage, or you can like change it to a lower leverage?
I'm not getting you.
If you are using, if you are giving a signal and you need to like reduce, like, can you reduce the leverage, or you just use this exact leverage you're giving?
It's like some of you have not watched the risk management videos. It's like just, yes, I'm going to send you guys. Please remind me. All these questions like that, they have videos that will answer them. I don't know why I did not send it.
Okay.
You don't. That's why I was explaining all these things. I was explaining was based on those leverage. There are trades that will tell you what leverage to use. These leverages here that you see here, 20x, it's not all the time that you should use them. Because there are times I might not have me time to come and edit it. That use 5x, 5, and no, I'll just send like that because I want you guys to trade the signals very, very fast. I might want you to trade the signals very, very fast. So I will not have me that time now to maybe come and be editing it, putting 5 leverage, putting this. No. Okay. I might not have that time. That is why at times I just send them like that. It's now left on you to maybe know the kind leverage to use by you just doing some small analysis, because the market will not run. It's not going to run. It's always, the market is always there. So don't just see leverages and bam, you are flying.
Okay.
All right. Are we there?
Yeah.
Any question again? I don't know if maybe I've not answered your question. Bring it. Bring it. Bring the questions. Bring questions.
Please, another question. When you when can you leave the market? If you the things is, we are giving a signal, but it's not going well. You are facing
if a signal is not going well, you can either close signal or your own, or you set your stop loss. When you set your stop loss, the stop loss will kick you out of the market. Do we even know how to set stop loss using percentages? Yes, I'm sure we know. We know that one.
Yes, sir.
Okay. We know, right?
Yes, sir. You taught us.
Okay. Okay. Yes, I can see another hand up.
Yes, sir. I want to find out how possible is it to hold a trade? For example, you want to hold a trade just for 24 hours.
I'm not getting you.
I'm asking the possibility of holding it for 24 hours when you're going against you. You need to come out of the trade, or you still remaining there.
It depends on what the trade is giving you at the moment. For example, if a trade is trading for more than 20 hours, it's still there just at minus 10%. No need to be scared. They still hope. Or you see it even at 15%. Maybe your stop loss is at 20 or 30%. If you see a trade at 15%, you leave it no matter the time. If it has not touched your stop loss, you leave it. And most often, people maintain the stop losses on the signals with high leverages. That's the worst thing to ever do on earth. Let me just explain it. The worst thing for you to do is for you to always maintain. Look at this stop loss like this. This is a weapon. You see why I used to put red something that is danger. Are we seeing it?
Yeah.
Which signal is this, please? Which signal? Which signal is this?
Cyber USDT.
Okay. I just wanted to confirm if we are seeing it. Now look at this cyber here. Let me go to cyber and then explain to you, even using the stop loss. Look at the entry point. Who can tell us the entry point? 8.00. Are we